Today we are going to study cash book. As you know, in the last lecture we studied subsidiary books, and I explained to you that why we need subsidiary books to reduce our work and effort. And I had explained you that journal is subdivided into many parts like cash book, purchase book, sales book, purchase return book, sales return book, then bills receivable book, bills payable book, and journal or journal proper. In the last lecture I have explained all others, and in this lecture I am going to explain you cash book and petty cash book. Okay, now cash book is of three types: single column cash book, two column cash book, and three column cash book. Here in this lecture I will be only explaining you three column cash book. Why? Reason is very simple, because in the three column cash book mainly there are three columns relating to discount, cash account, and bank account. Discount, cash, and bank. And in a single column cash book there is only cash account. And in the two column cash book, some authors say cash and bank account is there, and some authors say cash and discount column is there. But I will go by the idea that in the two column cash book, cash account and bank account is there. Reason is very simple. You know, in so many transactions, only very few come where the discount is involved. So it is always better to have two column cash book where we have cash and bank column. Okay, and in the three column cash book, as you see, all the three columns are there. So if we understand the preparation of three column cash book, we will understand easily the single column and two column cash book. So that's why I am explaining you the three column cash book. Okay, the columns in three column cash book are, it is divided in two parts. This is receipt side or debit side. This is payment side or credit side. Okay, and columns are date and voucher number, particulars, ledger folio, discount, cash, bank. Similarly, all these columns are repeated on the payment side also. So now let us understand how it works. All the transactions which relate to cash and bank are entered in the cash book. And cash book works as a journal actually, book of original entry. And from here, all accounts are posted except cash and bank. That means what? That as far as cash and bank account are concerned, cash book is also working as a ledger. The balance in cash account will show balance in the cash account. Similarly, balance in the bank column will show the amount in the bank account. Hence, this works as ledger also. That's why we sometimes call this as principal book as well as book of original entry. Right? Let us see how it works. The first transaction is the proprietor introduces rupees 50,000 as capital. The journal entry for this is cash account debited to capital. So cash account is being debited. Hence the entry will come on debit side of cash book or on the receipt side of cash book. Okay. Let the date be 1/1/12. Voucher number 1 to capital account. Here the account which is being credited in this transaction will come. Okay, amount is 50,000 received in cash, so it will come under the heading cash. Let us take the second transaction. 20,000 is deposited in the bank. Now what is the journal entry for this? Bank account debited to cash. So bank account is being debited here. So it will be like this. Put the date here. To cash 20,000. Bank account has been debited. Now you have to credit the cash account. Put the date here by bank account and put in the cash column. But as you know, we don't have to do posting for these amounts in the ledger. Hence these entries are called contra entries, and we put C in the ledger folio column. Okay, that means posting of this is not to be done in the ledger. Okay, the third transaction is received from Mohan rupees 5,000, on which we allow him a discount of 500, that is cash discount. You know, cash discount is entered in books. So what is our journal entry for this? Cash account debited 4,500, discount account debited 500 to Mohan 5,000. So entry will be like this: to Mohan 500 in the discount column, 4,500 in the cash column, and from here Mohan's account will be credited by amount 5,000, and we will write in the credit side of Mohan's account by sundries 5,000. Okay, the reason is why we are writing sundries, because we are not giving the bifurcation of cash and bank, and there the page number or the folio number of cash book will be given, so one can understand where he has to see where from it has come. Or we can divide this also. We can write by cash 4,500, by discount 500. This is also another way we can do this also. Okay. Now let us see. We make payment of salaries 5,000 through check. So entry is salary account debited to bank. Salary account debited to bank. You see, bank account is being credited, so that side will be used by salary account 5,000, because salary account is being debited. From here, salary account will be debited in the ledger. Okay. Let us make a payment of say 3,000 as rent through cash. Entry is rent account debited to cash. So by rent account, since we are making payment through cash, it will come here. Now let us make payment to Naresh, who is our creditor. We have to make him payment of 2,000, on which he allows us a discount of 100 rupees. So what will be the journal entry for this? Entry will be Naresh account debited with 2,000, because our liability of 2,000 is being settled. And rule for liabilities is when they reduce, they are debited. Clear? So Naresh account will be debited 2,000, and discount received account will be credited by 100 rupees, and cash account will be credited by 1,900. So entry will be like this: by Naresh 100 in the discount column, which we have earned, and 1,900 in the cash column, for which we have made the payment. Okay, and from here Naresh account will be debited by 2,000 rupees. Clear? Similarly, if we receive payment from some of our customers, and if they make payment through check, and we allow them some discount, then entry will be in the discount column as well as in the bank column. For example, from Ram, we receive 3,000, on which we allow him a discount of 200 rupees. So, and he pays us through check. That means he will be making a payment of 2,800 through check. Entry will be bank account debited 2,800, discount allowed account debit 200 rupees, right? And that fellow's account who is making us payment will be credited by 3,000. So entry will be like this: to Ram 200 in the discount column, and we receiving a check of 2,800 from Ram, so it will be entered here. From here, Ram's account will be credited by 3,000 rupees. Okay. Now, if we withdraw from the bank money for official purposes, what shall be the entry? Cash account debited to bank. Say we withdraw 1000 rupees. Now you see it's a contra entry because both cash and bank are involved in this. So cash account debited to bank, to bank 1000 rupees. It's a contra entry. Okay, and here it will be by cash contra entry, and it will go out of bank, so it will come in the bank column. So you have understood what contra entries are. Okay, now I would like to tell you one thing. Sometimes we receive checks which are not deposited on the same day. Okay, we shall take them in the cash account for the simple reason, if they are in the cash account, our physical cash will show less as compared to what our cash book will show, and then we will come to know that okay, there is a check which is still to be deposited in the bank, and when that check is deposited in the bank, then make a contra entry. Okay, I will explain this how it is done. For example, we receive a check from Mr. Prem of 5000 and it is not deposited the same day. We will take it in the cash column. So entry will be cash account debit to Prem, to Prem 5000. Though it is a check, we are putting it in the cash column because this is not being deposited the same day in the bank. Now on the next day, for example, if this is say 15/1/12. Now if it is deposited on 16/1/12, entry will be bank account debited to cash. So here it will be 16/1/12 to, it is being deposited in bank to cash. It will be a contra entry. And it will go out from cash by cash 5000. Okay, again this is a contra entry. Now this is the way 3-column cash book works. There can be so many transactions. For example, if the proprietor withdraws cash for his personal use, and it will be drawings account debited to cash. So it will be here by drawings, say 1000 rupees. And if he pays for his son's school fees through check, again it's drawings to bank. It will be by drawings in the bank column. Like this it works. Now on the end of the month, we'll find out the total, and whatever the balance will be carried forward to the next month. Let us see. If it is say 31/1/12, we'll first total up the debit side. 700 in the discount column, and it is 50, 55, 56, 60,500 here, and this is 20, 25, 27,800 here on the bank column. And on this side, the discount column total is only 100 rupees, and this is 20, 23, 24, 29, 30,900. And here it is 6,000. Though let me, I have written here totals. It is not to be written here like this. You have to just total them. Okay? Because we have to carry forward the balance. Now we know how much is our cash balance by balance carried forward. So 60,500 minus 30,900. 30,900, it comes to 29,600. 29,600. 600. Here now we will write 60,500 because both sides total is shown as equal. Okay. Now out of 27,800, 6,000 is deducted. We have 21,800. 21,800 balance in the bank account. And here we will write 27,800. Now on the next date, these balances will be carried forward. For example, this is your 1, 2, 12, 2 balance carried forward. How much? 29,600 in the cash column, 21,800 in the bank column. And let me tell you about discount columns. Please note that these discount columns are not to be balanced against each other. No, they are different. Actually, this discount is discount allowed by us. It's an expense for us. And this discount is discount received by us. It's our income account. Okay? The total at the end of the month, this 700 will be debited to discount account in the ledger. Okay? And the total of this discount account, this is 100 rupees, this will be credited to discount received account. It's an income. Is this clear? Now, by chance in this question, the balance carried forward in the bank account was positive. So it came here. Sometimes, if you have taken overdraft facilities from the bank, that is, bank has allowed you to draw more than what is the balance in your account. This is a kind of credit. Okay? If you withdraw more than what is in your account, you will have negative balance in the bank account. This is called overdraft. In that case, you know what will happen? The total of credit side will be bigger than the total of the debit side. Okay? Then that balance will be carried forward on this side, on debit side. As it is carried on the credit side here, it will be carried on the debit side. And when it is time to bring it forward to the next month, like it has been brought forward here, it will be brought forward here. This will signify that the opening balance in the next month is overdraft. Now I will explain you petty cash book. Now you know it's very difficult for the main cashier of an organization to keep record of all the small payments if he makes. For example, if the main cashier makes payment of 20 rupees, 50 rupees, 100 rupees, you know there will be so many payments, and at the same time these small payments will keep him occupied and it will hinder his work. So for this purpose, you know what organizations do? They appoint a petty cashier and give him a fixed amount for a particular period. Say for 15 days period they give him 2000 rupees. And whatever he spends out of that, he recoups from the main cashier after every 15 days. You know, this system is called impressed system. That means, for example, if 2000 is given to petty cashier at the beginning of a particular period, and after that period is over, say 15 days, he renders the accounts to main cashier, giving a statement that okay, he has spent under these expenses heads this much money. Say he has spent 1500 rupees. So having rendered the accounts for 1500 rupees, now he will recoup from the main cashier, or you can say the main cashier will reimburse him 1500 rupees, so that at the beginning of the next 15 days period, he will again have 2000 rupees with him. This system is called impressed system. Okay. Now let us see how it works and how we record transactions in petty cash book. This is analytical cash book, petty cash book. That means in this not only we will record how much money we have spent on petty expenses, but we will analyze them also. That means we will see under which head how much money has been spent. Let us see how it works. For example, on 1st January 2012, the petty cashier receives 2000 from the main cashier. Okay, that means main cashier will make what entry? Petty cash account debit to cash. So in petty cash book, the entry will be 2000 will be put in the receipt column. Date is 1112, voucher number is 1. Under the particulars, you will write to cash account because you have received from the main cashier. Entry was petty cash to cash. Now out of this, say on 5th, you pay 200 rupees for refreshments. So entry actually should be refreshments to petty cash. So here you will enter like this: buy refreshments. You will put 200 rupees in the total payment column as well, and also in the refreshment column. Okay, and after that, on say 8/1/12, voucher number 3, he makes payment of 100 rupees for conveyance. So here it will be by conveyance account. 100 he will again put in the total payment column and 100 in the conveyance column. Now if on 15/1/12 he makes a payment of say overtime of 300 rupees by overtime, say 300 rupees, and in the total column also he will write 300 rupees. On 21/12, voucher number 5, he makes again payment for refreshments by refreshments. Say if it is 100 rupees, 100 rupees. And next payment if he makes on say 25th, voucher number 6, he makes for traveling. So he will write by traveling 500 rupees. He will write in the total payment also and in the traveling also. And again, if on the next date he again makes payment for say conveyance 200 rupees, again he will write by conveyance 200, and again he will write in the conveyance column also. And if on 29th he makes a payment of overtime of 100 rupees, again by overtime 100 rupees. And on 31st he makes a payment of overtime again, or say traveling again, 300 rupees. So he will write by traveling 300 rupees in the total column and also in the traveling column. So for the whole month he has made all these payments, and let us see how much he has spent. His total comes to 1800. Now this 1800 must total up with this. Let us see. This is 300, 300, 400 and 800. 12, 15, 18. So this tallies with this. Now you know what is his balance. Balance left with him is 200 rupees only. So on this date he will write by balance carried forward 200 rupees. So it will become 2000 here and 2000 here. Now on 1st February, he will bring down this 200 rupees and it will be like this. If I use this space for this purpose, or okay, I write here only on 1/2/12, that is on 1st February, his balance will be 200 rupees and he will write here by balance brought down. Okay. Now how much he will recoup from the main cashier? He will recoup 1800 which he has spent. Okay. So again this entry, like it was here to cash, similarly now 1800 will come below. Date will be 1/2/12/1800. He will receive from the main cashier. Okay. So this is the way this is made. Now there are two things. Whether you want to make this petty cash book a part of the journal or not. If you want to make it a part of the journal, then what you have to do? You have to post these accounts, that is refreshment, conveyance, overtime and traveling, from petty cash book to the ledger. That means in the ledger, refreshment account will be debited by 300, conveyance by 300, OT by 400, traveling by 800. And this 1800, which is the total payment made, will be credited to petty cash account. Now you understand what I mean. Let me remove this. You know, when the main cashier had made the payment, he had put this entry. Petty cash account debited 2000 to cash account. That is main cash, 2000. So in this case, petty cash was debited by 2000. Now, if you make entries from this petty cash book, your entry will be like this. Refreshment account debited 300 and what was the other one? Conveyance 300 and the other was again I think refreshment, conveyance, OT 300. Then you had I think traveling 800. Okay, let us see. So this is coming to, I think overtime was 400. Let us not go into the detail of that. If it is say 400, it comes to 1800 to petty cash, 1800. If this is done, in this way, you have accounted for 1800 in the petty cash. So there will be only a debit balance of 200. And next time when 1800 is again given, then petty cash will be debited by 1800. Now these accounts have been debited from petty cash book, right? Now this is the system if you want it to be a part of journal. But if you don't want to make this analytical petty cash book a part of your journal, then you don't post it from here. You post only in the main journal, and for that you make a journal entry like this. A journal entry will be made like this, and that posting will be done in the journal proper. Okay? That will be done in journal proper. But if you want to make it a part of journal, or no further journal entry will be made, all this 1800 will be posted to petty cash credit account, credit side, and all those accounts which appeared here, they will be debited direct from here. I hope this point is clear. Right. Now, I would like to tell you that basically petty cash book can be of two types: simple petty cash book and analytical petty cash book. You know what I have explained to you right now is analytical petty cash book. Okay? And simple cash book. As far as simple petty cash book is concerned, this is this. Simple petty cash book. In this, the other columns which showed the details of expenses incurred will not be there. Payments. In simple petty cash book, this will be the format. That simply means that all those payments you made will not be analyzed further. But you see, this does not serve that big purpose of analysis of accounts. So it is not used much, but mostly the analytical petty cash book is used. I hope now you are clear about petty cash book.